Phone line to discuss SEBI's board meet is Jayesh H of Juris Corp. Hi Jayesh. Okay, let me tell you what we have so far. SEBI's board meet in Mumbai has concluded. We understand that SEBI board has cleared the changes in P notes. Now, essentially what we were discussing earlier and what was expected was that SEBI will make changes and align P notes to KYC norms. In a sense, tighten the kind of ambit or the overall norms that P notes have currently. How significant would this be? We don't have the fine print yet, but we kind of had an idea about what could be discussed. How significant would this be?
So I think the KYC norms are already quite significant and in place for the last few years, where when you're issuing the ODI, you have to ensure that the counterparty is a regulated entity and compliant and whatnot. What I'm gathering now is they're stipulating a sort of a consent mechanism for an onward transfer or a issuance of a back-to-back ODI. And while the reasons are stated that, to deal with round tripping and whatnot, I think this will really be a major blow to the market. What needs to be kept in mind is that there are a large number of genuine investors who do not want to come in directly into India and register as an FPI for the compliance burden which puts on you, whenever you register yourself in a new market when you're a global investor. And they prefer, therefore, the ease of buying ODIs from their known counterpart global dealers. Now, that market may get hit because if now, as a ODI purchaser, I need to go back to the seller to take his consent, it impacts my flexibility to sell when I want, the way I want, etc., in a major manner, which means it creates illiquidity. And why would I then want to, invest in an instrument where there can be a significant illiquidity? So while there are genuine concerns, I think other ways should be found to address those concerns and not by...
Okay, Jayesh, we are picking up. We have the fine print, and I'll request my team also to put that out in terms of flashes. We understand that the P notes have been, all right, the transfer of P notes will be restricted and allowed only, okay, we've lost Jayesh on the line, but let me go ahead into the details. So far from what we understand with respect to P notes specifically, we understand that they have tightened the ambit as far as participatory notes are concerned. So now the transfer of P notes will be restricted and only allowed after the consent of issuer. This is what we are talking about when you talk about consent of the ODI, which basically will restrict the transfer and the kind of P note issuance that we see on a day-to-day basis and cut down the P note issuances that we see. This will increase the kind of compliance essentially that we've been looking at. So essentially we understand that SEBI has increased the reporting and compliance standards for P note. The P note holder, and this is what we've been talking about and Jayesh was also pointing out, will be brought under the ambit of Indian KYC and anti-money laundering or the AML norm. So in a sense what this means is that now P notes that were... Okay, we have Jayesh with us. Jayesh, I was talking about the fine print that we have. So one is that the transfer of P notes will be restricted and allowed only after the prior consent of the issuer. Second is that they will be brought under the Indian KYC and the anti-money laundering norms. And that suspicion transaction that have been noted by issuer will be reported to a financial intelligence unit. So all suspicious transactions will now be scrutinized and looked into more carefully than earlier. How significant would this be in actually tightening P notes issuance and curbing round tripping?
As far as round tripping is concerned, I'm sure the people who do it will find other ways to do it. But what will definitely hit is the genuine markets for ODIs, because by the stipulations, in a way, they're saying that the IOSCO norms are not good enough and only the Indian norms need to be adhered to. See, the earlier approach was that you need to be a regulated entity, and if you are from a jurisdiction where the home regulator is a member of IOSCO, etc., that worked. So we were, going along with sort of this global approach of what is workable and not workable. Yeah. Now we are suddenly saying that, oh no, so it doesn't matter if you're an IOSCO member or whatnot. You have to now actually comply with Indian KYC norms at each level, which means the cost of doing a transaction will go up significantly. You need to keep in mind that many of the ODI purchasers are funds like pension funds and whatnot, for whom India is a small part of the portfolio, maybe not even 1 or 2%, even smaller than that. Now, for that small part of my portfolio to add to the expenses in ensuring all these compliances, I wouldn't be surprised, if this hits the ODI market in a major, P-note market in a major manner, and for that matter, even the actual FPI investments, because a part of these investments are made on the basis of ability to downsell them through ODI and so on. So it would be interesting to see how this impacts the market liquidity.
Jayesh, in a sense, you are saying that costs will increase, thereby pension funds and ODIs will not look at the P-note route and making. But, will it make, because we've gotten clarification from many government officials. We had Shaktikanta Das on the channel saying that P-notes will not be made redundant. So how will this change? Because P-notes can't completely be made redundant. They won't go out of the entire ambit. But how significantly would this change the way P-notes function?
So that's the point. We are looking at the P-note market in two different ways. One is that part of the P-notes are used by people to do round tripping. And our point has been that may be the case, then come up with ways to deal with them, as against coming up with norms which makes doing business in India difficult for those who are otherwise completely above board. Now, by stipulating these provisions, you're making these instruments hugely non-marketable, illiquid, because going back to a person for consent and then onward purchaser has to comply with the Indian KYC norms, which means you have to go engage in Indian counsel or so on for ensuring that you are actually ensuring compliance. Because a person sitting in Singapore, London is not going to certify that, are the Indian KYC norms being complied or not. So while they are saying that they will not kill the market, I think we will see significant shrinkage in this market. And again, I repeat the point that aren't there other better ways of dealing with round tripping? We've been hearing about round tripping for years, but how many cases have they really managed to get hold of to demonstrate this, concern of round tripping?
Okay, just to clarify and remind our viewers, we don't have the official circular of SEBI yet. What we do know is that specific changes have been made. This is confirmed that SEBI's board has cleared the consent clause with respect to P-notes, and we've been, the flashes on your screens is what we're picking up from our sources. Jayesh, would you reckon that SEBI would meet with industry players and get some kind of consultation before actually bringing this out or issuing this in the market?
Well, yes, they would have consulted industry players. The question is, given what the mandate is, to what extent will they be willing to listen and accommodate industry player concerns as to how this can impact, the entire feasibility of ODIs and also the genuine investor class, which has its own reasons for not wanting to register directly as a portfolio investor in India and invest in India only through ODIs. So I think it's a question of balancing that. How much are we getting impacted by round tripping, etc., and are we not now tipping it to the other extreme by bringing up these norms, which actually will kill the larger market?
Another point that I wanted to ask you, they are actively looking at curbing down on suspicious transactions. So one of the points that we're picking up is that suspicious transactions noted by the issuer will be reported or will have to be now reported to a financial intelligence unit. How will this really function, wherein they will create a unit which will specifically be dedicated to suspicious transaction, but what is the kind of mechanism that they'll need to put in place, given that there isn't any mechanism right now? What are the checks that they'll need to put in place to be able to curb this?
Before that, then again, it raises the question that some of the ODI issuers will question the viability of the business, because now they have to put in place an additional function, which is ascertain what can be viewed as suspicious transactions by Indian authorities, so that then the ODI issuer can gather information on those transactions and then report them in the manner required, which means added compliance requirements on the ODI issuer. Now, as far as your question is concerned, it's a moot question again, that in the past we have had these norms in place in the other market segments for so many years. So what has been the track record of, based on suspicious transactions getting reported, the authorities having actually unearthed unaccounted money or market manipulation and taking action against such people? I'm not aware of any such major instances. So if that is the case, then why come up with a mechanism where you're not able to then demonstrate implementation of it in a manner which benefits the market?
Correct. Okay, Jayesh, we'll get back to this story when we have the final circular. We still don't have any circular coming in. Okay, we have live visuals coming in of that board meet. The board meet has ended. You saw UK Sinha earlier. Those are reporters at the board meet asking SEBI officials on details. Okay, I think we're getting the audio. He's not.
वेबसाइट पर आगे ना हो गया ना आपको मालूम है लेकिन पी नोट से कंसेंट हुआ सर हाँ सबका सब इशू
He is saying
नहीं कंसेंट और पी नोट प्लेस हुआ कंसेंट ऑफ व्हाट कंसेंट का जो मैकेनिज्म चेंज करना था वो और पी नोट केवाईसी वाला वो कर दिया सब कर दिया केवाईसी वाला कैमरा मत लगाओ यार ऑफ द रिकॉर्ड है भाई.
Okay, so you heard this tip. Reporters, basically, SEBI officials are asking to say this off record. They have said it right there that KYC norms are now brought under the ambit of P note. So as we have been reporting, and we can remove sources too, that the P note norms have now been aligned to KYC, which will significantly tighten the kind of ambit under P notes. If I have Jayesh with me, Jayesh, it's confirmed now. Jayesh, if you're still with me, it's confirmed now. We're still not getting that official circular, but SEBI officials have on camera confirmed that this will be brought under KYC ambit. You told me the amplifications of this, but how long will this take to actually come into effect and thereby have the ripple effect on the markets or on P notes holders?
So, we have to see that what is the timeline they're giving for putting this in place, and then the ripple effect will kick in. So, whatever the cutoff date, the market participants will start working backwards and take a call. And I wouldn't be surprised if some of the ODI issuers actually take a view that, they want to shut down this desk of issuing ODIs because of the added compliance, not just the cost, but from some of these players, you have to keep in mind that it's not just a cost as in a financial cost, it's a cost as in also a reputation that you don't get it right and you have an infraction and then a notice being issued and the global reporting and the reputation impact and all of that. So the ripple effect, I think, in the next 3 months, we should be seeing this.
In the next 3 months, okay. But, I want to understand if the government has been going out of their way. UK Sinha, in fact, SEBI has been going out of the way to say that they're looking at tightening the ambit of P note to curb round tripping, yes, but they don't want to make it redundant. But if, in a sense, the ripple effect means that ODI issues will have to shut down desk, if the cost will go up, what will the loopholes or what will be the areas that SEBI will need to put in place to ensure that that doesn't happen or to ensure that P notes don't become redundant?
Oh, I wouldn't be surprised if in 6 months from now, we are again discussing how SEBI is then, redoing the norms to make it market friendly, because I understand the concerns of the authorities that there is some amount of round tripping happening. And my question still remains that, surely other means can be found.
Right.
It's like you make life difficult for the people who comply with the norms.
Okay, Jayesh, on that one, I'm just hanging there with us. We also have Motilal Oswal, market veteran with us. Mr. Oswal, you heard Jayesh point out this could possibly make life difficult for markets, for P note holders, for the entire P note market could possibly become redundant. Do you agree with KYC norms, with P notes coming under the ambit of Indian money laundering or KYC norms? Do you agree that thereby in the next coming months, P notes could eventually become redundant?
I don't think so that eventually it will become redundant. Of course, I think I would say that the whole objective is to bring much more transparency into the system and also see that any kind of, round tripping from the taxation perspective or even from kind of money laundering perspective doesn't happen. So I think this definitely in the short term may impact a bit here and there. But P note doesn't mean that the transactions are not genuine. See, most of the transactions are genuine. So genuine people will get kind of adjusted to these new norms which have been announced. And maybe small number of people, a small number of participants they may stop trading through that. But I don't think so that's a real serious issue from that perspective. the whole objective, I think it will bring a lot of transparency to the system.
Mr. Oswal, I wanted your, Jayesh and I were just discussing with respect to the consent mechanism. How significant would the fact that transfer of P-notes will now be restricted and allowed only after prior consent of the issuer? Now that there is the consent clause added to this, how significant would that be in actually creating that transparency? Wouldn't it cut down on the kind of freedom that the issuer would have?
To some extent, yes, the freedom will be lost, but I think from the broader perspective, that's what actually was desired from the whole transparency perspective, the kind of a thing to stop any kind of a thing misuse possibility.
Okay.
Yeah.
Okay, let me understand in that case, how significant, how would the consent mechanism work? So all we know so far, sir, is, and we again still don't have the exact circular yet, SEBI officials outside that board meet have confirmed indirectly that the KYC norms are now going to be brought under the ambit of P-note as well. So till we get the circular, we won't have the fine print, but how would they go about creating that consent mechanism clause for the issuer, sir?
As you said rightly, that we'll have to, I think, see what kind of, I think, terms could come out of that. And in that absence, it's difficult to take a call.
Okay. Mr. Oswal, I also wanted your quick comments with respect to how they will bring down the kind of suspicious transactions. So one of the points that we understand is that SEBI board has cleared, that's what we're picking up from our sources, that suspicious transaction noted by the issuer will now have to be reported to Financial Intelligence Unit. Do you believe that, or how seamless would it be to create a Financial Intelligence Unit, and would you be able, or would SEBI be able to thereby have that kind of ambit or compliance over these transactions, over suspicious transactions?
See, definitely they will have to, some more caution will have to be taken by the writers. But I don't think so that really there will be any kind of, or the larger amount from the suspicious transaction perspective. Otherwise, the people will not accept that kind of, I think, customer from whom they would like to do the business. So obviously it's what is that these are the global requirements from I think taxation a larger perspective, but I don't think so that there will be any kind of, I think, suspicious transactions. Otherwise, why should somebody really take this kind of transaction? If I know my client is going to be suspicious, I'll not accept that client as my client, right?
Okay. Net, Mr. Oswal, Jayesh and I were just discussing this as well. Net, would the costs go up? Eventually, will the costs go up, thereby making the transaction way more complicated than it would have been?
Yeah, if you look, I think, in sync with what the Mauritius Treaty has kind of, I think, come. So definitely, I think cost could go up in that sense.
Okay. Also, sir, in terms of, if you look at, okay, just hang in there, Mr. Oswal, and I'd ask Jayesh also to stay on the line with us. We also have the former executive director at SEBI, Jayesh Gupta, with us. Mr. Gupta, thanks for joining in. We are still awaiting the exact fine print of the circular, but from what we know so far, the P-notes have been brought under the ambit of Indian KYC norms. The consent clause, that is the consent mechanism, has been brought in, wherein the transfer of P-notes will be restricted and allowed only after prior consent of issuer. How significant would this be to actually bring in transparency, curb round tripping, sir?
See, this is what was expected for a long, and finally it has been done. See, it is going to be a game changer in the sense that now only the money which is coming to the country would be money which is coming in the transparent way and from the known sources. You will not have any suspicious money coming. The idea is to control any round tipping or suspicious money from the sources which are not welcome investors. Now, as a regulator, as an ex-regulator, I can always say that whenever any law is brought, there are a lot of noises because everybody registers change. So all the noises that will happen all over the place will be only to register change, but it is a good thing in the long run. Because any country or any investor want to be there in a place where there is a transparency and you know whom you are dealing with. So short term there could be issues, there could be some problems, but long term there will not be any problem. And as regarding the cost, I would say that we always complained about the cost of compliance will increase. Yes, it may increase.
It will.
But look at the safety that will increase for all of you, all of us. As an investor, as a country, as a market, the safety for everybody increases. That is one. And then the stability. Now, many investors in India would not be coming here because they may be fearing that you do not know which are the investors who are with whom you are investing.
Yeah.
Now, if the market gets cleaned up, then many more investors will come. So maybe your loss that you are expecting could be overdone by the new money that will come in.
But sir, the concern is going to be if at all this will make, because if costs are going up, there is the concern, of course, that P-notes will be redundant. You don't believe that this will significantly reduce the kind of chances that an ODI holder will want to take?
No, I would not say that the P-notes will become redundant. Yes, only those players of the P-notes will go away who are coming into the category of people who bringing the suspicious money or the money which is coming to the round tripping. Okay. So only those class will go. See, if anything, any changes, you do not stop investing in the place. You start complying with the law. So many investors will comply with the law. Only those investors who are sitting on the fringe, who are belonging to the category of suspicious money or round tipping money, they will go away. Let them go away. Nobody is bothered about them.
Okay, fair enough. I request Mr. Gupta, Jayesh as well as Mr. Oswal to just hang in there. Let's understand what the impact would be on the markets. And just to clarify to our viewers, the official circular is not out. This is what we are picking up from our sources. But yes, we have confirmed that SEBI has cleared the changes to P-notes as well as the consent clause. Now, let's understand exactly what impact this would have on markets. I have Lata with me as well. Lata, we saw on Monday morning, in fact, the market reacting to this, maybe not significantly, but yes, this is something that will worry markets. How significant would this be in the short term, say tomorrow, and how do you expect markets to kind of react to this in the long term?
It's impossible to answer that question because we don't have the press release. What we are reacting to is 3 sentences. And what I'm giving you by way of market reactions is only to these 3 sentences. Yeah. One, that there will be no sale of P-notes allowed inter-C. They will have to sell it only to the P-note issuer, or rather, inter-C sale of P-notes by one P-note holder to another P-note holder will be with the consent of the issuer. If this is the rule, it is almost a non-rule because P-notes are not sold between one another. There's hardly a market. They are always sold to the issuer, and the issuer sells the back-to-back shares in the market. So one P-note holder selling it to another P-note holder with the consent of the issuer is almost a non-issue for the market. The worry for the market is, will the new KYC rules apply prospectively or retrospectively? Going by the way in which the government has handled the whole Mauritius issue, usually rules will be prospective and they will not ask you to, dig out the details of P-note holders of 5 years vintage and 4 years vintage and apply it to them. So that also is largely answered by the market to its advantage. They believe that the rules will not be retrospective. It will be only for people who incrementally buy P-notes. The third issue they have is really the basic issue which all of us are discussing. What exactly does SEBI mean by Indian KYC norms? Yeah. Even at the moment, there are 3 categories of FPI, registered FPI. Only the third category is, you have to give your passport, signature, all details. 1 and 2 categories don't have to. So what exactly would they mean by Indian KYC is what the market wants to know, and that perhaps will be known only when the press release is out and the detailed guidelines are out. But my question is to Mr. Gupta, what is your guess when they are saying that we are moving the P-note holders KYC to Indian KYC rules? How is it different now, sir?
See, I would not be able to tell you exactly because the KYC rules from country to country could be different. So the issue is this, that what SEBI says, that we will follow the same KYC rules as we follow from any investor which is in India. So maybe proof of identity, proof of address and all that thing, that would be required. And I don't think it is a big deal because any investor who is a genuine investor would be having it all the way.
Okay.
The problem comes only when I am not a genuine person.
No, I want to know how different it is now. Jayesh, would you have an idea? Is Jayesh with us?
Yeah, Lata, sorry.
Yeah, no, we are given to understand that you are moving the P-notes to an Indian KYC and Indian anti-money laundering norms. I would assume that anti-money laundering norms would always have applied to P notes as well. When you say you're moving it to Indian KYC, what is the current KYC and what is an Indian KYC? How are they different?
So, our experience, I'll give you one specific instance. In certain Western jurisdictions, it's actually a violation of the privacy laws and an offense to take copies of the passport and share it. Okay. Now, if the Indian KYC norms requires you to do that, I just can't see how ODI holder is going to agree to that. They rather will not buy the ODI, because why would they, buy the ODI and for requirement is comply with Indian norms, which will require them to violate their own home jurisdiction laws. So that's why our point has been that there are enough investors out there who don't come in as FPI because the Indian portfolio constitutes a small fraction of the global portfolio, and for them it's not worth the cost and effort to register directly. And that's why they do ODI. We seem to be...
We have the official circular with us. Let me just cut you there. We have the official details with us. So let me go through them point by point. It's already on your screens in terms of flashes. So SEBI has confirmed that the board has taken note.
We can go straight away to this ABCD.
Yeah.
The ODI subscriber cannot be resident in a country identified in the FATF task force as the jurisdiction having a strategic anti-money laundering or combating the financing of terrorism deficiencies to which countermeasures apply. So he cannot be a resident in a country identified by the Financial Action Task Force, the FATF, as a jurisdiction having a strategic anti-money laundering or combating the financing of terrorism deficiencies to which countermeasures apply, or has not made sufficient progress in addressing the deficiencies, or has not committed to action plan. So I guess these are jurisdictions identified. Mr. Gupta, are such jurisdictions identified?
Yeah, everything is identified. The countries.
What would they be? Bahamas or something like that?
No, Bahamas was not there. Countries like Syria and all other things were there, if I remember correctly.
Okay.
So these are the countries with the hostile environment.
Okay. The next rule that they speak about, or I think an elaboration of the rule is, besides ODI, subscribers are not permitted to have opaque structures. Opaque structure means any structure such as protected cell company, segregated cell company or equivalent, where the details of the ultimate beneficial owners are not accessible, or where beneficial owners are ring-fenced from each other, or where the beneficial owners are ring-fenced with regard to enforcement. It may also be noted that NRIs, resident Indians, are not permitted to transact in ODIs. Mr. Gupta, that's a new and difficult rule?
No, see, FATF rule always had that the idea was to identify the last physical beneficial ownership. Okay, so it is now being implemented in true spirit. Even if you see the FATF rules, the idea was to have the last physical beneficial ownership so you can trace the money, whom the money belongs. So when the shell companies, etc. are formed, then you lose the trail.
Okay.
So it is not a new thing, but it has been implemented now fully.
Okay. Jayesh wanted to come in on this as well. Jayesh, just quickly come in on this, and then we'll go into the point of KYC norms and the changes that have gone through.
The first one is a non-issue. It's always been there that, if you're not an FATF compliant, you don't qualify. I don't think anybody has an issue there. The second also, what are we really talking about then? I again don't see a problem with the second.
Okay, let me talk about the KYC norms then. Lata, we were talking about how different or what exactly this will mean. They've clarified, and that point is important. So KYC and anti-money laundering norms will be applicable to ODI issue, as is the same for all other domestic investors. ODI issuers will now be required to identify and verify the beneficial owners in the subscriber entities who hold in excess of the threshold as defined under Rule 9 of the Prevention of Money Laundering Act. That is 25% in case of a company and 15% in case of partnership firms. And in such cases, the ODI issuers will be required to identify and verify the persons who control the operations of these entities. So this is the exact fine print that we were talking about. Jayesh, quickly come in on this. You heard the percentage as well. How significant, or how would this change the game?
So I think if they are going to apply this on a completely pass-through basis but rely on certification, then things like pension funds and or gratuity funds, etc., will not get it because none of them will have any major holder, even 1% and above, leave alone 15 or 25%. Our concern is funds like those which otherwise would have found it very difficult to comply with these norms. So if we are talking of such a big threshold, then there is. I think the market will accept it. The point still remains is the consent part of it. So
no, consent, I was told, is not an issue at all. I spoke to some P-note issuers. They said, in any case, P-note guys don't sell it to one another. So the question of asking my consent and selling doesn't arise. They normally sell it to me. And I sell I take the derivative and sell the underlying in the Indian market. They were not worried about that consent. Do you have a different view on that?
No, so when you talk of consent, it can operate two legs. One is the ODI holder itself doing a back-to-back issuance. The second is the ODI holder exiting the ODI by selling to another person as against having to come back to the issuer. While what you heard in the market is true, that there is still enough instances where the ODI holder prefers not to go back to the ODI issuer and sells it to somebody else who otherwise is qualified to hold the ODI, which is fine if you're saying, because see, the problem on the consent part is, again, you're taking away some flexibility. The point still remains is when you're saying Indian...
Okay, yeah. Where is the inflexibility on consent?
My ability to do a back-to-back ODI without having to take the prior consent of the ODI issuer. Because the ODI issuer will wonder, why can't I do it directly? Why should the ODI holder do a back-to-back?
So they've clarified that, Jayesh. They've said that ODI subscribers will have to seek prior permission of the original ODI issuer for further onward issuance or transfer of ODIs.
Exactly. Whereas earlier approach was, you're allowed to do back-to-back as long as the new back-to-back ODI holder also complies with the norms.
Okay, since we're talking about compliance...
No, I didn't get you, Jayesh. The one ODI issuer whom I spoke to said this was not a problem. He said the guys who buy my P-notes don't often sell to one another at all. Not a question of often. They never sell to one another. If they want to get rid of their P-notes, they come to me, to the issuer, and I sell it. He said that the question of asking for my consent didn't arise.
I agree with that part, but there is also a part of the market for various reasons where the ODR buyer in turn issues a back-to-back issuance.
Oh, okay.
And reports it. Mind you, reports it.
Okay.
But here now to tell that ODR buyer that you take prior consent of the ODR issuer before you do a back-to-back, that is going to be a problem.
Oh, I see. Okay, what about this other one which Kritika read out to you? That ODI issuers shall be required to identify, verify beneficial owners in the subscriber entities who hold in excess of the thresholds defined in Rule 9.
In a
that is 25% in a
company
company and 15% in the case of partnership. Is that...
If they are sticking to 25 and 15% and things like passport copies applies only to those, then I think, it will impact very small segment of the ODI market then. I don't think that's a really concern.
Okay.
So how they have worded this is yet to be seen when the actual amendment of the regulations come. Will they apply it on a pass-through basis? Because, let's not forget some of the pension funds set up drop-down subsidies, sort of a feeder structure to invest into India. So there, the immediate ODI counterparty can be seen as having a single investor, which is 100%. Now, but if you're going to do it on a pass-through basis and go all the way upstream, then I think it will work well.
Okay, it's not just about P-notes. There are a lot of other details that have come out. Let me quickly talk about the last bit of points mentioned as far as KYC review is concerned. KYC review will be done on the basis of a risk criteria that will be determined by ODI issuers. We are talking about the suspicious transaction reports. ODI issuers will be required to file suspicious transaction report, as we were saying, in which we had flashed earlier as well, with the Indian FIU units. ODI issuers will have to reconfirm their position. Basically, they'll have to carry out reconfirmation on a semi-annual basis, and there will be a periodical operational evaluation. Now, over and above these review details, SEBI has also approved the proposal for a dividend distribution policy for listed companies. So basically, they have approved the proposal for the top 500 listed companies by way of market capitalization that's been identified to formulate and disclose the dividend distribution policy in the annual reports. So Lata, this policy basically so far includes circumstances under which shareholders can or cannot expect dividend, financial parameters that will be considered, internal and external factors that will be considered for declaration of a dividend, and policy on how the retained earnings will be utilized, provisions in regards to various classes of shares as well. Basically, the reason why this has been done is this will help investors in taking well-informed decision, making it a simpler process. Okay. How significant would this be, as in the fact that
we will have to get Mr. Gupta on this. Mr. Gupta, does it make for predictability? Basically, it looks like it's a new responsibility being cast on large listed companies that they should have a dividend declaration policy which will make clear to the investor under what circumstances they cannot expect a dividend.
Okay, see, this is not a new concept. World over, all the large corporations have a dividend distribution policy where they say that they will be distributing this much portion of the profit every year to the subject to following conditions. So it can be related to the debt equity or profitably increasing or whatever it may be. So that is and why they say, because many places the cash flow from the investment is what is the recurring income for many people for distribution or for their survival. Okay, so in India it has been a very absent policy. Yes. And every promoter, every company does it on the basis of their personal need. If one particular the promoter needs lot of money, then the high distribution.
Is this how I understand this? So is this how I understand this? Now, it cannot be that a promoter or a promoter group decides dividend at its will and sometimes just lends its excess money to group companies in the form of intercorporate loans and denies the benefits to a shareholder. These kinds of things cannot happen. They will have to say under what conditions they will give dividend, and therefore the shareholder can take the company to court if the company does not live up to its own dividend policy. Is that right?
Lata, you are going too fast.
Okay.
In India, very few shareholders take the company to the court, so things are not going to change overnight.
Okay.
And still they can still do, because they will have to explain the situation, and you can always explain the situation because X, Y, Z I am not able to do.
No, so whom do you complain to?
Now,
let us assume a mutual fund company is upset with...
You complain to stock exchanges, you complain to SEBI, you complain to Ministry of Corporate Affairs if the company has not lived up to the promise.
Yeah, I know shareholders will not, but it is quite possible that institutional shareholders can make use of this. Is it possible?
Yeah, they can. But then I am going to tell you something else. See, what is happening in India, which I am seeing, which is going to happen in the near future, you will not see high dividend distribution at all. You are going to see lot of buybacks happening. Because the dividend tax that has been increased, put on the 10 lakh and above share dividend, you have put a tax. So you are going to see the dividend distribution in the form of buybacks.
Okay.
And you do, after 2 or 3 years, you do a large buyback so that you get return cash to the shareholder. Then you do, after some time, some right issue or something, increase the capital again. And then 2-3 years later, you do the buyback. So you will find a very erratic dividend policy going forward. That is what is my expectation, because I am seeing some of resolutions which are coming for the buyback of securities from the thing. That is one. But dividend policy is a right step because it gives some sort of a stability or certainty to the shareholder that if the company is performing that way, I am at least going to get that much money in my hand for spending.
Okay, so it's quite possible that the listed entities will set such high bars that they will not be hauled up by their institutional shareholders. That's quite possible.
Yes.
Okay, in any case, it's a positive step. There is another small rule which perhaps is going to benefit the BSE and the NSE, especially since the NSE has declared that it has plans to get listed. The board has taken note of Mr. K.V. Kamat's committee's recommendations, and they have said that if stock exchanges already have enough of settlement guarantee fund and therefore the existing rule that 25% of the profits by stock exchanges should be set aside for the settlement guarantee fund need not be valid anymore. Okay, Mr. Gupta, please hold on. We also have Mr. Harish Salve joining us on the phone line. Mr. Salve, good evening. We understand we've got the press release where the SEBI's rules now require detailed KYC rules to be obeyed by ODI issuers. Is this going to be a deterrent? I mean, they have to, for instance, ODI issuers will have to carry out and reconfirm the information of their ODI positions on a semi-annual basis. They shall be required to file suspicious transactions. Are any of these new rules that will be very difficult to follow?
No, I don't think so. See, we have to, I'm very happy SEBI has not thrown the baby out of the bathwater. There is a lot of debt which derivatives add to capital markets. But as we go along, we find if they have a potential for misuse and abuse, then those we have to tweak them from time to time. All over the world today, we know that banks are rigorously reinforcing KYC obligations. Point number 2, beneficial ownership, whether it is made public or not, A, is always known to banks. B, is always in jurisdictions which have information exchange treaties, is always known to governments.
Okay.
I mean, it's a common myth which has been created that, you know, offshore companies, you can hide beneficial ownership. BVI, for example, British Virgin Islands, from 2011, has an exchange of information treaty with India.
Oh.
Yes.
Okay, so what are we talking?
Yeah,
okay.
We like talking a lot of nonsense. So I'm happy SEBI has not let the baby go out of the bathwater.
Okay.
But at the same time, it is still possible through trusts and offshore trusts in black hole jurisdictions. There are still a lot of black hole jurisdictions which do not allow any information to escape. They have been identified by the Financial Action Task Force.
Yeah.
And they've said, first of all, don't stop doing business with them. And that was coming. The OECD Task Force report itself, under American pressure, had sort of brought this about, saying over a period of time, unless you open up your information to governments, you will be put out of business.
Can you give us some examples of these black holes, sir? By what?
I think, for example, Liechtenstein has still not agreed to open up information. I'm given to understand Bahamas still not yet come onto the bandwagon and so on.
Okay, Bahamas, which was the first country you said?
I think Liechtenstein still has problems with information exchange.
Okay.
So that's why today, if you go to a banker with these countries, in any case, most bankers today don't want, you know, after the HSBC debacle, and after they've been fined so heavily by regulators all over the world, banks are very careful today. Banks themselves take all your paperwork all over the world, not just here.
Okay.
And if you're what do they call it, the politically empowered person or politically something. I mean, I'm telling you, it's so silly.
If you're politically empowered, what happens?
Yeah. No, a person like me, for example, I mean, 2004 to 99 to 2002, I was Solicitor General.
Yes.
From 2002 to 2016, 14 years I have not been this.
So what is the disadvantage you suffer for having been politically empowered?
No, they are, every time I transfer money from India, I have to certify that this is coming from a taxpayer account.
Okay.
Yeah, if I get money from overseas into India and put it in my Citibank account, suppose a foreign client sends me a remittance, the Citibank asks for a declaration from me saying that this is professional fees.
Okay, fair enough.
So so
all these rules are already in place, is what you're saying.
Yeah, for years these have been in place.
Okay, what about these new rules, sir? The KYC review shall be done on the basis of a risk criteria as determined by the ODI issuers in the following 2 buckets. One at the time of onboarding and once every 3 years for low-risk clients, at the time of onboarding and every year for all other clients. Is that new?
That's right. This is new. So this is now, you see, today ODIs are doing it. It's not that they are not doing it, but each is doing it to its own good sense. One important distinction you must understand, ODIs normally function in accordance with the rules applicable to those countries. If I go and open an account today in, say, London or in New York, the bank will ask me for declarations as required in New York.
Yes.
If you want to open an account in Delhi or in Bombay, the Indian bank or the branch of the foreign bank in India will ask you for declaration as per KYC norm to the Reserve Bank.
Yes.
Correct?
Yes.
Now, ODI is acting, say, in New York. So it is asking for ODI declarations as per New York custom, New York regulations, New York rules.
Yes.
India is now saying we will declare KYC. If that ODI is going to issue derivatives which will ultimately find funds coming into India,
Yes.
then it is our prerogative to declare the norms which you must rigorously comply with. That's a very significant and a good change made by SEBI.
Okay, it's not an overreach, you think?
No. See, it's like this. If you're putting money in my country,
Then I better know what.
I don't know who it is.
Okay.
All that I'm saying is tell me who it is.
Okay,
That's
now
all.
what worries the market, I assume, is that this is at the time of onboarding and every year for other clients and for low-risk clients once in 3 years. Now, what this means is that those who came in before all these rules came in, I mean, the strict rules of KYC and final beneficial ownership
See,
came
there's
in.
always a bit of grandfathering.
Yeah, but there is no grandfathering here, isn't it? Because
No, so there
every
is
year and once in 3 years, you have
onboarding.
to...
Yeah, every year you will do it. See, I'll tell you why. There may be changes. You don't know.
But here the grandfathering is not allowed, isn't it? Because...
No. See, here annual is necessary because this can change from time to time.
Exactly. So the grandfathering
Mr.
does not
A-
work, doesn't it?
Can't work. That's why it's an annual review. Onboarding and annual
And
review.
annual review. So suppose I was a P-note holder, I was an ODI holder of 5 years vintage. Now I will have to come and comply with the new rules.
Absolutely.
At the time of the annual...
Absolutely.
Okay. So this
You know
might
what has
create
happened?
worries for the market, you think?
No,
that,
why? Now let me tell you something which is not written about in the Indian media.
Yes.
A lot of foreign banks which had all these questionable accounts
Yes.
are from certain clients, not in India but outside India, who have been called by the banks and told, here's the money, take it, either bring it out into the open or get out from here.
Oh.
Because 2017, everything is going online. You know that.
Yes.
2017, any government will be able to log on to any account in any bank
Oh, I see.
and check. Yes, it's all this
So
days
you...
of hiding money.
Okay,
and
so,
all
sir, for a more immediate question for our viewers, will this mean a bit of a heart attack for the markets in the near term?
No, it should not.
Should not.
See, the genuine markets work on funds which are legit.
Yes.
Why should this be? In fact, I would have been worried if SEBI had said, look, we
I will
are
look through
finding
these,
this
okay.
controversial, so tell you what, let's scrap the P-note. That would have been an overreaction.
Okay.
SEBI has shown that it is a mature regulator who is willing to take the problem head on and deal with the problem.
Okay.
And tighten norms. And see, we can't get rid of derivatives because then you're losing for a country like India, which now wants to run the Make in India campaign and invite investment into India. We cannot lose a source of capital only because some Indians in the past may have abused it.
Absolutely.
Mr. Salve, another
See,
point.
let's rewind. What are we worried about? We are worried about Indians abusing it, right?
Yes. No, we are given to understand that there are a bunch of good guys abroad who want to invest in India but who don't want these hassles of KYC because they find Indian rules too tedious. That is the big worry, whether they will run away.
Let me tell you the fallacy. Why will they run away? There'll be a bunch of KYC rules, right?
Yes.
These guys in their home countries in the Western world, believe me, are being subjected to very rigorous regulation already.
Okay.
So I think this is a bit of a misnomer. The rules of the game have changed there also.
Okay.
Banks are no longer opening those numbered accounts and, all that is all
Fair
toast.
enough. Fair enough.
So in any case, that's why onboarding now, banks have been told, if you want to put money in India, it should be clean as a whistle. Now, we are not, if a Britisher is coming through an American P-note, we are not worried because he is a British taxpayer.
Yes.
His country will worry about it.
Fair
Our main concern was if Indian money is being sort of,
round-tripped
sneaked out and then brought in through P-notes.
Yep.
This will put complete end to that.
Fair enough.
Once we have solved that problem, we are not here to solve the world's problems.
Okay.
You know something, if money put in a New York bank by a non-American, once they are allowed to put your money in, it's the most secure place because they don't share information with anyone.
Yes.
They only receive information, they don't share information. So everybody worries about the money coming into their own country. Once that is legit, They are willing to. So why should India not follow the same path?
Fair point, sir.
That's what we have done.
All right. Thank you very much for that reassurance. That's the finest legal voice in the land saying that this is a mature reaction by the capital market regulator and markets ought not to worry because this is anyway the quality of rules followed everywhere in terms of declaration of know your customer norms. With that, we wind up this discussion on SEBI's
Lata, before we quickly wrap up, one point that we didn't bring up was the fact that InvITs has been completely changed. They were basically talking, if you remember, about the various guidelines that had been brought out. So now they have clarified and that has been changed, the basic guidelines of InvITs. So there are 4 points to note here. They've allowed InvITs to invest in a 2-level SPV structure. There's something that a lot of companies had been asking for, a lot of promoters, and our colleague Naveen Shetty had reported this as well. So mandatory sponsor holding will now be reduced from current requirement of 25% to 10%, which of course will make it easier for funds to actually invest. The number of sponsors will come down from 3 to 5, will come up to 3 to 5, and other requirements such as aligning regulations in line with the provisions of Companies Act, filing of project implementation agreement has been cleared. A consultation paper will be placed and this will be taken up. Another point that has come out is a guidance note has been issued on the settlement and procedural changes in processing of compounding applications. Okay. Basically, all the dispute regulations and litigation that had been come up, they've brought in a guidance note on this. A couple of other small changes as well, but over and above P notes, about 3 to 4 important overarching issues which will have minor and micro impacts across the board.
Fair enough. Well, completely out of time. Thank you very much for watching this special presentation of the SEBI's new rules on KYC.